All right. Today's what? January the 10th, 2024. Journaling my trade idea this morning. That worked out. Let's go ahead and start at where I'm usually interested in. So at this time, let's see, top left. All right, top left. I was looking here, which is my daily chart, but built in seconds. I like to see 30% retracement, just past it, 33, 30%, somewhere around there. It's typically what I like to see. You can see that yesterday also followed the same rule, just past 30% and rejecting. So that was a good sign that price was pulling back up in and was sufficiently collecting a discount per se. All right. So let's move on to, we've been bullish, right? Structure from the daily, weekly, monthly, all the high time frame has been pointing towards bullish. So we know that that is our foundation, and we should look for opportunities where price is looking for a discount and not look for bearish opportunities to engage in the AM session. And okay, so let's go to my TPO chart, top left, bottom left. All right, so in here, yesterday in your notes, we did a lot of balancing down here, and we had that excess, which is good to see, and then again here, and we had the very strong buy side located in this area, so we expected this rip. We were looking for it to spend a little bit more time here, but I should have, as I mentioned yesterday, I should have really calculated double projecting deviations, which brought us up to here. Because of all the time we spent here, they don't want people to get out, right? They want to trap them and move it up to the next area where it hasn't been painted very well, very inefficient. And so that is this strip. And then continuing up, we also have this strip, and then a little tiny one up here. But I'm more interested in us working in this area right now, as it's just not very efficient. And over here in my ICT TPO that I kind of came up with, right? This is very inefficient. This is not a volume chart, it's a time chart, and I've broken it into ICT kill zones in particular time frames. Each color represents a different time frame of the day that I'm looking at to see what price did. So you can see, as yesterday I was saying that I really wanted to see price come here. That was yesterday's target, and as I'm speaking right now, it was pretty much delivered too. But it wasn't in the AM session when I was trading. But as you can see here this morning, this blue is London, this green is the non-trade time window, and then this is the green kill zone. It went down and took the low, took London low, took the lows here, and then made its push up. But that's kind of after the fact. I'm going to move forward and show you my entries, Kevin, and what your thought process was. So let's exit this screen. Bottom left. And now move into our So this is the chart that you've been following lately. It's in your 16 quadrant of a daily candle in time delivery. and we have this manipulation, which equals the 4 delivery. It took 2 days. Same manipulation, same measurement, 4 perfectly delivered here. And then we have this manipulation perfectly delivered 4. And so now we're looking for the new up delivery in 4 deviations. And so this measurement takes us to basically the 1700 area, 9650. Here on the second day, we've got this up manipulation, which only took us not even one standard deviation down. So this has not been worked yet. This deviation, this morning's manipulation though, is suggesting a similar level of the 4 standard deviation from this original manipulation. And so we're looking for 1700 to be delivered, which would move into the efficiency. Let's see, 1700 on your TPO, right to the bottom of a lot of where time was spent on your TPO, if we can deliver there today. They might save it for tomorrow, the news release. Okay, so this morning's trade idea, we are following your rule set of monitoring the standard deviations of the Asian range and looking for a discount below, if we're bullish, below midnight and below preferably around the 30% area, is between 30 and 20 of the previous day candle. So here, this yellow is the Asian range, all this price action from last night, and we can see that moving down, price was able to deliver almost to 1 standard deviation. We do, let's see here. So the question was, did we get the 20 to 30% retracement? Yes, we did. And I was notating that level, that it was 805 was 30%. So right here. And I still would have been interested if we were below the 20%, which is 826, which is still below midnight. When London takes out both sides of the Asian range, typically you can see a very choppy day. That's something that you've notated and are aware of, and kind of like a balancing day. So we can expect that for the majority of today's trading. And let's see, this T2 high is the high of yesterday's RTH session, meaning only during the New York session. So that's a very powerful discount to get back down below in. And on top of the fact that that level is 20 to 30% of the entire day's trading range from 6 p.m. to 5 p.m. Right? 6 p.m. to 5 p.m. the following day. It's the daily candle. So we can see that the where am I going with this, Kevin? All right, so we had that as your foundation. You knew that that was a high probability trade. That price was in a severe discount, and here is let me spread this out a little bit. You can see here, this is the London manipulation, which drove down to the T2 high, and bodies could not even close at it. They were only able to do the damage with the wicks. But we do like to see that the manipulation deviations are aligning with powerful price levels, right? And you can see here the fourth deviation, which is my what I'd really like to see. The fourth deviation aligned with the 8:30 Open and the New York Open. So that's pretty darn powerful as well, that this measurement is in fact what the algorithm is using. We at the time that, so another good sign, right? Here, this red candle, these two red candles, or four red candles, are the AM 850 to 910 macro, and that does, I like to use that. It's usually the manipulation that seems like it's providing the facts. You know, this is just pure manipulation, but this is the one that's measuring the day. So we took that measurement off, and we watched as price opened, ran up, and hit R3, which is what ICT likes to use, one more of like a safety exit. So we've got the 3, you can see it tagged it perfectly. Also, this is an inversion for value gap. You can see that price came up to the midpoint, which is this yellowish line in the middle here, but made sure it tagged the third deviation of this morning's manipulation. And then we saw it return. The reason why I still didn't feel comfortable going in was because, so if we take, let me show you, I'll show you, you had an SMT this morning, can typically be good, but you're missing experience on it. Top above name. Alright, so this is ES, S&P. You can see here that this is that same manipulation that we were just looking at, that I measured from. That manipulation took sell side below midnight, this pink line, and took sell side. So let's, above main, let's remove that. Let's go back. You can see here that this failed to take this low. It did not take any form of sell side, which is an SMT. ES did. NQ didn't, and that's the platform you're trading. So it did, however, leave equal, more or less equal lows, right? So we knew there was sell side waiting to be taken. And so as we watched price return down, clear the opening range sell side and London's sell side, made the price even stronger, because now they trapped everyone above this buy side and took out any longs that had their stops here. So now price is ready to expand. So you took 2 entries. You can see here entry 1 was at 819 and a quarter, which is right here, which on lower time frames you were monitoring. Over here to the right, you were monitoring your structure, and it was showing bullish. It gave you reason to enter based on everything we just discussed. And so the second entry you took a little bit higher, still below midnight, still an extreme discount. 833. So, right, 833, right here. Oh, I guess I took it above, didn't I? Take that back. Oh, I think because I saw this break, retest, and reject. No, that's the wrong side. Why did I take that second entry? Okay, so I went down. I'll have to look at my 1 minute chart to remember properly. What time is that? It was 10:15. Ah, there we go. There's my notes from 10:15. So, let's see here. We got to the 2.5 on a 1 minute chart, and it rejected from the tick, so that was powerful, which is this very low here from that manipulation. 2.5 is typically between 2 and 2.5 is where you're highly likely to see a reversal, here on my microscope charts. And we can see here that price moved down with an imbalance, manipulated, taking the sell side, and then quickly moved above, and respected now this consequent encroachment of this balanced range, this SIBI, which is now an inversion fair value gap, on my 64 quadrant of a daily candle chart. And so that gave you reason that you're on track from your more risky entry this morning at the low to now where structure's supporting the idea, but still early in the trade process. Okay, so the bottom line, I had to pause for a minute, but the bottom line is you were explaining how price effectively reached your discount targets and deviations aligned, and you are explaining your entries and continuing on to your exits and why. And so you can see that, let's see, we were just finishing up explaining that we were about ready to get through some very powerful levels, and the fact that it pushed through. You were monitoring price over here on your 64 quadrant chart, and you can see that you were just mentioning that price did that final manipulation that you wanted to see, taking sell side. Now everyone is trapped. They had already been manipulated up. Buy was engaged, buy side was engaged, and now sell side was engaged. So they're ready to continue with their expansion up. This is a balanced range, these two right here, with the manipulate trap traders and balanced range. And now you've got your second balanced range, and this is the inversion fair value gap, which is being respected by 50%. Bodies are not closing below. Just the wick did a little bit of damage there, but it's moving in the proper direction. So your first target was the T1 halfback. This is the halfback from the overnight trading session. It is good. It was to exit there because it is a powerful level. You knew it was going to go higher, but you're learning to close profits in case something goes against you. Close in profits, pay the trader, don't be as greedy, and you still have one runner because you are limited to 2 contracts at this time. So we exited, we put our take profit just below the T1 halfback, and then as you can see, price reached this area and did a retracement down, but everything was still looking good. As you can see, this was that retracement down on a lower time frame. This is 5 minute chart. This is the 1.348 minute chart, which is 64 quadrants of a daily candle. but you can say it went back down and it was using the Asian range high. It was using the open. It was using the 8:30 news release, all as support, while the wick did reclaim this order block here, this bear bullish order block right here. See, right to it, which is really close to 50% of that inversion. So everything is still pointing to aggressive buy. This was just a manipulation to rebalance this little area, and traders, that was it, and it's going to continue lower. But we knew there was a different story in play. Then price pushed aggressively up, had another down move, which this down move was 50% of this busy right here. So it's respecting midpoint of consequent encroachment. And then we got another massive push. I'm now expecting this to be an inversion fair value gap on the opposite side, right? So this is that original one from London. Now we've pushed through it and we are using it. This manipulation, what's your rule, Kevin? You are shooting for 4 deviations. There was your projection for deviation. On the Asian range, it aligned perfectly with the 250 or 2.5 deviations. So it was a beautiful target. And as you can see, you placed it just in case it didn't fill you. And you placed it just below that target, and you can see that purple. That's the actual level that you got out at. And then you can see that they did a little manipulation. This is also during the minute macro. So here we are. We reached our target by macro time. Price did a manipulation and returned back down to this area here, staying inside of this massive busy inversion. Bodies never closed. They just reached for half back. Again, they're reaching for another discount, which was from the the overnight session on the matrix below 50%, right? So here is that discount. They're reaching into it with the wicks for in close of London kill zone level right there, that purple level. But you can see that now the bodies are respecting the midpoint and continuing on. You have an overall target of 4 deviations from your higher time frame chart, right? So you're expecting today delivery. It's the second day. You want to see it reach the 4th deviation here, 7,003. So I know that's a lot left on the table, but remember, you are okay. So as you were saying, your overall projection today was the 4th deviation, because now you've got 2 days that are aligning with that 4th deviation. And all right, but I kind of got distracted. So you exited. You were done for the day here. That was your target. You believed it was going to go much higher, but as far as let's call it just more of a guarantee today, your 4th deviation within the macro was perfect, and it delivered. But you can see how price is showing that it's not wanting to go back down, and it continued higher, moving up. Here is your level that you were expecting to hit a couple days ago, but you can see how powerful that was. So it was from your TPO chart, you notice that was the PM kill zone low. and it was 4 deviations, and it was the close of your daily busy, and 75% of the Q4 busy. Everything was aligning. All right, so I got really sidetracked with some life things, but back to close this up. I kind of don't remember very much of where I left off, but I just want to say that good job, Kevin. You didn't trade anymore today. Your ending balance after commission was $1,737. Two very logical trades. They were worth the risk. The odds were greatly in favor, and the algorithm was doing as it was programmed. And just for fun, at quick glance, just want to see how this day ended up working out. Here we are. It is 4:34 right now. Price made it to where you were wanting to see it. In fact, it's still a little short, but basically it's there. And funny enough, my exit right here today was 50% of the today's trading range, as long as the market doesn't do something crazy here by the next 30 minutes, 25 minutes. But you can see my exit at the 400, the 4 deviations was successful. And then we can see that the algorithm macro kicked in, which is the 1050 to 1110 macro. Kicked in, worked up, went back down, back to a discount. It went back down just below, ticked below the yesterday's midpoint, which was bringing price back into a discount, as that's where you can buy. So the algorithm was programmed to buy. You can see how jumpy it was there. Moving off some very important levels. We've got the 4 a.m. level. We've got the fact that it could not even reach 50% retesting this. And none of the bodies closed outside of that inversion fair value gap. And then the second algorithm from 1150 to 1210 kicked back in and scared people that it was going short, and then began to drive up, closed bodies on upper 50%, and then drove up to my one I really wanted to see tag. This I've been waiting for this. And then the day proceeded. We came back down, and bodies weren't closing below 300% deviation of the Asian range, and we drove up, making a very beautiful clear manipulation high at the 7th deviation. As far as reaching my 4 deviations over here on the right, we still have not achieved that, so I'm still looking for that to be done, so we'll see what happens tomorrow or overnight. It's not too far. I can see it driving up there overnight. But we can see that the manipulation here, then we entered into the 3 o'clock macro, the 3:15, 3:45 macro, and we can see price drove back down, was respecting this, drove it back up, and then went for the final manipulation, which you always see retest of the 130 level. It is programmed to tack it, to hit it, and it did right there. That blue level is the 130. It took out the 130, and did we get the lunch low? No, we have not taken the lunch low. So we're looking for that to be taken before New York Open tomorrow, or during New York Open, to take the lunch low. And then where's lunch high? Lunch high. Lunch high was taken. So we know the next form of liquidity that they're going to want to grab is the lunch low at some point. So here we are, we're seeing 6 deviation perfectly is holding the bodies back, and its resistance, and as far as the higher time frame levels go. Let me bring up that top left. So we can see here that this almost reached the bottom, which was the close of that day. I don't really see anything else that clearly aligns, but we can definitely see that my 4 quadrant chart, it grabbed it to the tick right there at 16,982.50, which is basically also the middle of this bearish order block, which is what you don't want to see price. I mean, you want to monitor the mean threshold of that block for looking for temporary rejection at least. And the fact that it was also filling this entire imbalance here was perfect, right, algorithmically. And then over here on this side, it also was perfect algorithmically, right? Right there, just ticked right at it, reached up there to touch it, it delivered. Yep. So high time frame, looking good. All right, that'll do it for today's notes, and tomorrow morning, what do we have tomorrow morning? Let me bring up this here. We've got trade calendar. Tomorrow's the 11th, and we've got 8:30 and lots of news at 8:30 a.m. We have CPI, so. And then Friday, we have PPI. So Thursday and Friday, red folder news. So we'll expect to see some volatility the next 2 days. All right, and so you need to be looking for what kind of manipulation they're going to want to do to fake people out. Be prepared for that, because they're going to drive it in a direction to get as much inventory stuck in the with the position running against them, so they can use them as liquidity. So great, beautiful day. Good job reading the price. Good job following your rules and your reasoning why you got in and where you got out. Safety entry and exits, high odds for both, and price delivered much higher. Who cares that it did, right? Who cares? Just ignore the fact that, be happy that you were able to call the fact that you knew it was going to drive much higher. And be happy with the $1,700, almost $1,800. So. Peace.